Thanks very much for joining us. Hi everyone, my name is Nicholas Reid from Reid Corporate, and on behalf of Essential Metals, ASX ticker ESS, a very warm welcome to this special Resources Rising Stars investor webinar. Well, as we all know, the lithium sector is white hot at the moment as the booming electric vehicle and lithium-ion battery sector continues to go from strength to strength. And the shortage of lithium raw materials continues to drive prices higher, in fact breaching new records just this week. As EV sales continue to soar and the major OEMs scramble to secure supply, many expert commentators are predicting sustained deficits over the coming decade, creating an exciting opportunity for new developers, particularly those with deposits in Tier 1 locations. Essential Metals is one such developer, as it advances its 100% owned Pioneer Dome lithium project in WA's famed lithium corridor in the Eastern Goldfields towards production. The company is rapidly ticking the boxes towards development, with recent positive metallurgical test results announced this week, a resource upgrade due next month, and a scoping study due by the end of this year. To tell us about Essential's journey up the lithium value curve, we're delighted to have the company's Managing Director, Tim Spencer, with us this morning to run us through the story. Before I hand over to Tim, a quick reminder that we are very happy to take as many questions as we can from investors this morning. Please use the Q&A tab on your webinar browser and remember to log your questions while Tim is presenting so that I can put them to him at the conclusion of his presentation. With that said, it's now my great pleasure to introduce Tim. Tim, good morning, welcome, thanks for joining us, and please run us through where Essential's up to.
Good morning, Nicholas, and good morning to the audience out there, and many thanks for the opportunity to present Essential Metals at what is a really exciting time for the company as we transition from explorer through to developer. So I'll just take you through our latest presentation and provide a really hopefully succinct overview of the key points of the opportunity that we present. So first and foremost, we're one of the fortunate companies that actually has a lithium resource, a spodumene lithium resource in Australia. There are only 13 of them, as we all know, and most or all of those, bar us, are already obliged under an offtake arrangement. I'll talk a bit more about what our plans are on that front. The other key opportunity or strength of ours is that our project is located in a mining jurisdiction. We're south of Kalgoorlie, where we've got access to great services, to labour, infrastructure. It's a fantastic place to develop a project. We're funded for what we need to do. We'll close the year with more or less the same cash balance at 30 June. We've got listed options that expire at the end of November. Which will bring in some money. They're well in the money. We're getting our self-development ready. We think our timing is right. We're aspiring to be a producer in 2025, and we're making sure that we position ourselves to make sure that we're ESG compliant. That's so important if you're producing lithium. The team that we have in place across the management and across the board are all very experienced resource sector players, participants. We've been involved in multiple developments taken from resource through to production. Craig McGowan is a very experienced capital markets person, ex-chairman of a large Perth broking firm. Paul Payne has looked at hundreds of resources for DD. He knows a good one from a bad one. And Warren Hallam, you'd know as a managing director, ex-MD of Metals X, very experienced operational and corporate. And my management team at this stage, very experienced in their tasks of exploration and also in lithium. And we're looking to build out that team as we move forward. We're a retail stock where there aren't many funds in there. At the moment, we think that'll change through the next 6 to 12 months as we grow the company. We're certainly on the radar of a lot of funds, and I get a lot of inbound inquiries. But as I mentioned before, we're well funded for what we need to do in the foreseeable future. So where we sit, well, there are two main lithium provinces, as we know, in Western Australia, which is the dominant lithium supply jurisdiction in the world. The Pilbara, of course, some big mines up there, but there are also some pretty good quality lithium deposits in the Yilgarn Craton, the Eastern Goldfields where we are. We're surrounded by 4 or 5 other lithium deposits and mines, so the geology is right for finding lithium. And of course, our lithium deposit is evidence of that. We sit on 11 million tonnes at 1.21%, so excellent grade. And I'll talk you through some of the characteristics of our deposits that make them very attractive to actually turn into a mine. We've got some other non-core assets in the portfolio. These are exciting opportunities for us because they're pre-discovery. We're free carried, and we're certainly not obliged to spend a lot of money. And we can sit back and wait for discoveries to be made by our partners. So where we sit, we're about 130 kilometres south of Kalgoorlie. We're right next to the main highway that runs from Coolgardie through to the seaport of Esperance, where Mount Catlin and Mount Marion and Bald Hill export lithium concentrate. And along that highway, there's a railway, there's a natural gas pipeline, there's a water pipeline. So there's some really good infrastructure. We're 10 k's literally off the main highway. There's an access road that already runs directly to the deposit, west from the highway. And as I mentioned before, we're very close to mining centres of Kalgoorlie, Kambalda and Norseman. So accessing equipment and people is a lot easier here than elsewhere in remote WA. So it's a really good location. It's flat lying, it's lightly wooded. There are operating mines all around us. So from a mines department point of view, they understand our flora and fauna. It's held under native title with the Naju people. We have a very good working relationship with the Naju people. So we don't see any roadblocks to heading towards development. And the key thing is we've got a lithium resource. Not too many companies can say they've got a spodumene lithium resource. The beauty of our resource is that there are 3 deposits. They're quite distinct from each other. They outcrop to surface. They're fairly straight or tabular, both in strike and in dip and plunge, which really lends itself to open pit mining. We've completed metallurgical test work now that literally covers from the surface right through the resource into fresh rock. So we've completed 4 composite sample test work programs, basically through the weathered material at near surface through to the fresh rock down below. And it all shows us that we'll end up with a really good recovery rates to produce a saleable concentrate with a low iron content. So they're massive ticks for the project. And again, just demonstrate how easily we can turn this into an economic mine. That just gives you a view of the 2 main deposits, Cade and Davey. As you can see, fairly straight. The colours are grade profiles. Excuse me. And you can see there's some really super high grade areas within the deposits. Most of it's over 1%. So, and even in a subdued lithium price environment, these things are still fantastically economic. The fact that when we start digging, we're straight into ore is a massive plus as well, from a working capital requirement point of view. We completed some drilling earlier in the year, and this demonstrated, as you can see in that cross section, this is the Cade deposit. Fantastic grades, really good mining widths, up to 30 metres wide, and so again, just demonstrating the quality of what we have in front of us. These this drilling through the weathered and transitional material, really good grades, and that's what we conducted. We selected core from that drilling to conduct the metallurgical test work. Most recently, we've completed some drilling that we needed to undertake to define the scale of the operation that we can plan for. And this was conducted, I suppose, it was fairly aggressive. We went really deep under Cade and also under Davey because we wanted to know what happened at depth. Do these things dissipate? Do they blow out? Do they coalesce? From what we see, the Cade deposit, for example, is we've gone deeper than the spodumene mineralised zone, particularly in this part of the deposit, or the pegmatite. We did hit very thick pegmatite towards the south of Cade, up to 40 metres in thickness. Evidence of fractionation, not visible spodumene. We need to wait for assays to come back to understand the lithium content, but it certainly means that there's a big pegmatite system that's come through that's carried the spodumene, and we need to keep exploring on it to understand whether there's more spodumene phases present. With Davy is a smaller deposit than Cade. It's less defined by drilling, so we had to complete some drilling both at depth, and also along strike. And we hit spodumene to the north in 5 of the 6 holes that we drilled. So that's very encouraging in terms of then turning that into resource. We'll get the assays back by the end of October, and then they'll feed into a resource update scheduled for November. So we're getting ourselves development ready. We've kicked off a scoping study. We've appointed Primero, and Primero are arguably the leading lithium EPCM consultancy. They've been involved in quite a few of the Australian lithium projects. We're Generation 3, or will be Generation 3 project, which means that obviously there are a lot of learnings that have been taken from the first 2 that are coming through, that are in production now and or being built now. So we can leverage off the knowledge that's been gained. We've completed a baseline flora and fauna survey. There are no red flags on that front. As I mentioned before, we've got a mining agreement already in place with the Naju people. So that's another big milestone that's already been achieved. And we've now completed the metallurgical test work that de-risks these ore bodies from a processing point of view. And processing is key for lithium deposits. We've completed a high-level hydrology study. Even through the last drilling, we know there's a lot of water sources potentially available to us. So we need to then, as part of our detailed feasibility studies, we'll look into how we're going to source water. In terms of the scoping study, the idea is to complete this by the end of this year. It could take until January, just because of the Christmas break and everyone, including yourselves, being on holiday and probably not watching the announcements as closely as you should. But the key part of the scoping study is really to demonstrate the economics of what I would call a tier 2 size operation. So we're aspiring to base it on an initial mine life of 6 to 7 years. Putting out probably 180,000 tonnes of concentrate. Of course, this needs to all be confirmed by the scoping study, but they're the sort of broad metrics the study will be based on. We'll get assays back from the recent drilling. We'll update the resource in November. We'll then commission pit optimisation studies and scheduling. They'll feed into the scoping study, and then we'll be able to demonstrate to our investors and shareholders the economics. And I know that they'll look pretty robust, but obviously, an independent study will confirm that. It's also important, not just from an investor perspective, but it's also very important from us in terms of attracting a project partner. We've embarked on a process now where we'll seek expressions of interest from parties who have already contacted us. And we're talking, authentic downstream large players who are in the lithium space, who've got a lot of experience, a lot of money. We'll use the scoping study when it's complete to then shortlist those participants that we'd like to further engage with, and then try and achieve an outcome that is a real win-win for both the off-taker and potentially financier and ESS shareholders. So it's going to be an exciting time over the next 3 to 6 months. So from a timeline perspective, just to run through, we've completed the resource drilling that we will conduct this year. We're waiting for assays to come through by the end of October. They will then feed into the resource update that will be completed during November. The scoping study is already underway and will be completed either late December or into January. And then the intention is, based on subject to the results of the scoping study, is to then launch into a pre-fees. And part of that, obviously, we need to gear up in terms of our personnel. So actively pursuing the right executives to join the team, both marketing and technical, and then we can push the project forward on that basis. Exploration is still very, very important for us because we are going up with a shorter mine life compared to some operations. We've got amazing prospectivity. We've got 450 square kilometres of ground. There's less than 10,000 metres drilled outside the Dome North resource and the Sinclair cesium mine, so there's a lot more work to be done on exploration. And part of the build out of the team will be, of course, beefing up our exploration team as well. So it can be pretty aggressive next year as we head towards our production scenario. Just touching on exploration, it's important to understand the context of where we're at today and where we started and how we've arrived at where we're at today. So we started looking for lithium in 2016, and we're really fortunate that as part of the first exploration program, drill testing pegmatites, we came across what is now the Sinclair cesium deposit. So the Sinclair pegmatite is an enriched LCT pegmatite enriched in cesium. That formed the focus of the company for the next sort of 2.5 to 3 years. So it took us from sort of 16 through to 19, was really just focusing on developing the Sinclair cesium mine, which we executed successfully. And then we went back to looking for lithium in mid-19, following up a geochem anomaly. And our geos, within a couple of months, found what is now the Dome North spodumene resource. So we've had 2 discoveries on this ground in relatively short time frames. 2020 was, as we all know, was a bit of a downturn for lithium. So we focused on our gold projects during 2020. Back into March, April 21, we were able to then focus back on exploration on lithium, and the focus was around looking for more pegmatites in and around the 3 that we have that make up the resource. And this year's been about just improving the quality and the confidence of that resource to push through to production, because we can see that the sentiment and fundamentals of lithium was so much more improved. We now need to get back to exploration. We've got a lot of targets. We've just completed a structural review that'll help us generate more targets for us to go and field test. And that'll play out over the next few months. In the background, we still have 2 100% owned gold projects. They're actually really good projects. They've taken a second step away from lithium because obviously our focus has to be on the lithium project. But they're actually really good, prospective, exciting gold projects too. So we'll continue to work on these in the background. We'll continue to add value to them. And at the appropriate time, my guess is that we'll look to monetize them. And that can be said too for our JVs, where we have multiple nickel and gold exposures with minority interest, where we're free carry to a decision to mine. So we don't need to put up our money or really our time. We need to keep informed, of course, and watch what's going on because they're pretty exciting. But they're not dragging us away from our focus on our lithium projects. And again, there's something that we will monetize at the right time, at the right price. So the key takeaways are, well, look, we're funded for what we need to do. We've got a really good experienced team in place, and we're going to build that team. We've got a fantastic lithium project that's eminently mineable. There are no peculiarities in shape or location or complexity that make it difficult for it to develop a mining project. And we're in a fantastic location. We want to position ourselves, and all lithium companies have to do this, to be ESG compliant. And spodumene from WA is the #1 prize. Canada's is probably second, but hard rock lithium from an ESG compliant, low risk jurisdiction is the #1 prize for downstream. We've got an amazing opportunity in terms of our exploration upside. We're going to be working very hard on that as we go forward. Continue to work hard, I should say. And so we're looking for some real value uplift in the next sort of 6 months. We've got exposure to other projects that we can monetize and bring in additional cash at the right time. We're not forced to do anything with them. And it's a really exciting opportunity, I think, both for the management team and the board, but particularly for ESS shareholders as a transition from explorer to developer. And that about wraps it up. Many thanks, Nick, for the opportunity, and of course, I'm happy to ask any questions that come forward.
Thanks very much, Tim, for that concise and very clear run-through of the essential story. Just a reminder to everyone to please use the Q&A tab, send in as many questions as you can. Before we get into those online questions which are coming through, Tim, I'll just start with a quick one here. I've got in front of me a new research note from under the banner of Evolution Capital, which is hot off the press. I see it's dated the 12th of October. And it's got a great summary of the essential investment proposition and a price target of $1.12, I think. So could you tell us a bit about that report and where people could potentially access it?
Yeah, look, that report, as you mentioned, was published, or finalised yesterday, and it's been published today, and that'll be available on our website later today. And also, we'll be putting it up through social media, so particularly on LinkedIn. So you'll be able to find access to a link to read that report. As a company, of course, we can't talk about price assumptions, but I think most people in the audience would say that we do represent a compelling investment opportunity. And the good thing about that report is it'll help the number crunchers have a look at the economics that an independent analyst has come up with in terms of pricing assumptions. The base case is based on a 2,500 spot price. I think that's a realistic long-term price. It'd be great if it stays at 7,000, but even at 2,500, you can see the economics of a smaller project like ours are absolutely mind-blowing.
Fantastic. Thanks, Tim. Well, I'm sure many of our listeners will go hunting for that report later today. But let's jump into some questions from the audience. So the first question here from Paul Jacobs. Have you had any further takeover approaches recently?
No, we know that we're probably on the radar from other lithium participants or wannabe lithium participants. Our job is to just keep with business as usual, focusing on moving forward, adding value to our shareholders through improving the value of our assets, and that's our focus.
Thanks, Tim. There's a couple of questions here that are quite similar, so I'll combine them from Warren Brown and Simon Lanicia. So Warren says, given the very high prices being received by Pilbara Minerals and Core Lithium for their direct ship lithium ore, and the low cost of opening a lithium mine at Pioneer to Dome, does Essential have any plans to produce DSO in the immediate future? And Simon's related question was, are you considering the sale of a spodumene DSO product prior to constructing the project to generate early cash and possibly using Pilbara's BMX platform?
Yeah, look, it's very good questions, and it's certainly part of our thinking. Obviously, we need to get a mining lease in place and mining approvals to do DSO at the Dome North resource because it's still under an exploration lease. The mining lease is under application. The way to think about it is that if you send out DSO, it's a lower value add product. Of course, the capital requirement is a lot lower too. But if you do send out DSO, you are robbing yourself of the opportunity of adding value by selling that, processing that material into a concentrate. I think there's an opportunity for us, as Core have done, where you position yourselves to build a concentrator and produce concentrate, and then in terms of creating additional funding, look at what opportunity there is for DSO, because it certainly is a really good price. Just remember too that the price relationship between DSO and concentrate is one where as concentrate falls, DSO falls a lot harder because of that value add difference.
So concentrate is the main game.
Yes, it is, because you create more value per tonne of resource.
Just a related question: Are you sort of following the midstream and other sort of value adding initiatives that Pilbara and others are looking at, and are there opportunities there? Yeah,
look, we certainly are, and particularly there's a couple of overseas projects where they have smaller scale size resources, and they're talking building converter hydroxide plants. Our internal view is that the resource as it sits today is not big enough to sustain the capital required for both a concentrator and a hydroxide plant. There's certainly possible opportunities, I think, down the track, getting economic benefit, and that can be done through the offtake, and to try and leverage the being an upstream player. But really, building a hydroxide plant is not part of our planning at this point in time.
Thanks, Tim. Next question from Daniel Ovid. What is the process involved in the EPA applications, and have you got a timeline on when these applications will commence?
Yeah, look, that'll all be played out through in parallel with the detailed feasibility studies that we undertake. So the idea is that we'll kick off in March with the pre-feas, work through to DFS, and ideally, if we can get those done by sort of March 24, I think that'd be a good outcome for us. And of course, we'll be running our permitting approvals processes in parallel. I mentioned before that we're in a mining jurisdiction. It's reasonably low risk from an environmental sensitivity point of view. So we don't envisage any big hurdles there. But of course, we'll be on top of making sure that it all comes together as we head towards a decision to mine.
Thanks, Tim. Next question from Joshua Patrick. Are we expecting an increase to the total tonnage at Pioneer Dome in the November MRE update, or just conversion of tonnes from inferred to the high confidence indicator category?
Yeah, look, the drilling that we completed was designed to target a material increase in the resource, particularly the deep drilling at Cade. And as we published the results, as the results that we published demonstrated, we didn't hit big, thick intersections of spodumene, so they won't add, those holes don't add to the resource. So my view is, and of course we have to do the resource calculations, but my view is the global tonnes won't change a lot. We've currently got 5.4 million tonnes of indicated. I think that there's we'll be pushing that north of 7 million tonnes, and that'll form the basis of the scoping study. So it's all about improving the quality of the resource. We're beholden to geology, so we're doing great to have added material to the tonnes, but the drilling we've done to date hasn't done that. So we need to now find new pegmatites, and there's plenty of opportunity in and around Dome North and elsewhere in the project to do that.
A follow-up from Joshua. Can you tell us what concentrate price will be used in the upcoming scoping study?
No, I can't say that. That'll be published as part of the scoping study when it comes out. Right. We have to, of course, have an in-house view, but ultimately it has to be referenced to an external price.
Fair enough. Question here from Stephen Matthews. So he makes an observation that the Bald Hill mine, which is one of the other projects in this part of the Eastern Goldfields, is closed, which I think may not actually be correct. Perhaps you can update us on that. He says, why should we not be concerned? I guess that's a reference to, the volatility of the lithium cycle. My understanding is that Bald Hill project might have actually restarted. Is that?
Yeah, my understanding is that it's still under a deed of company administration. So the parent company is still under that DOCA, and they have managed to recommence operations using their subsidiaries that aren't under the DOCA, and have, from what I understand, have been conducting mining activities and shipping concentrate. But ultimately, the DOCA situation still has to be resolved. I'm not sure about the part of the question.
So I guess it's he's referring to that difficult period for the lithium space in 2019 and 20 when prices obviously fell sharply. So perhaps if you can just give us a view on your sort of longer term prognosis for lithium, and why Essential's confident in the short to medium and longer term outlook. Yeah,
look, the key to a project surviving, of course, is how it sets itself up from a funding and a pricing environment or situation. So we're in a position, I believe, that in terms of negotiating with a project partner and off-taker, is that we'd be looking to get some sort of price protection in place to underwrite the project. And of course, we'll also be looking for assistance on the funding side. So, that's why I think there's been some impatience from some shareholders saying, why don't we just do sign an offtake MOU and get a cornerstone investment? That doesn't solve the problem of getting to production. So, and also underwriting the project. So that's the game that we want to play. And it really depends on being able to demonstrate to a potential partner the economic framework of the project and hence the scoping study. In terms of the cycles, look, every cycle is different. We all know that the lithium first cycle was a very, very small market and it didn't take a lot of supply to swamp the market. It's fundamentally changed now and we're literally at the very start of it. So I'm not too concerned about lithium in terms of pricing. I think the price could halve and we all still make a lot of money. And also spodumene is the number one prize. It'll be mandated that you have to be ESG compliant by the car manufacturers. So, good luck if you've got a project in Africa and you're trying to achieve all the right ESG credentials. And that's not to say African projects won't. I shouldn't diss them, but certainly if it's coming from WA, it's a lot easier to achieve that.
Thanks, Tim. A couple of questions about offtake strategy here. So from Joshua, Patrick, and Nick. So I'll combine them. Joshua says, can you provide any indication of the type of potential finance or strategic offtake partners who you're targeting through your process? And from what region do you see a potential offtake partner eventuating? Is there any particular geographic focus in your offtake strategy?
Yeah, look, we have multiple number of interested parties that we'll be engaging with and seeking their response to the expressions of interest that documents that we put out. There are two paths that we can go, I believe. There's the going with a really credible, reputable incumbent downstream who can take spodumene, is already processing spodumene concentrate, turning it into chemicals, and therefore can help us both technically and financially. And two is that there's another opportunity to go with a partner who might have access to multiple facilities and therefore can provide flexibility to make sure that because we don't know quite how this will play out over the next 5 to 10 years in terms of downstream. So the opportunities will appear, and I think it's going to be the rate of change is going to be increasing. We will be surprised how quickly it changes. So there's the two ways that we can go, and so we need to take that into account as a company to make sure that we've got the flexibility we need to survive what comes through in the next 5 to 10 years.
Thanks, Tim. Next question is from David Broomfield. He says, Tim, can you please tell us if there are any tin or tantalum credits associated with the deposit? Look,
there aren't. One of the benefits of the fortunate, sorry, let me start again. The positives of our deposits are that they are very clean, and that means that there are other elements such as tin are not present. There is some tantalum present, which you always get within an LCT system, but it's low ppms. We're not really counting on any sort of material tantalum concentrate revenue stream. Of course, we'll look at that, but we've got tantalum in resource of sort of 40 to 45 ppms. Other operations producing tantalum concentrate credits typically start with a tantalum in resource of a couple of hundred ppm. So we're not really focused on it. And also just mentioning too that we have a very low iron content. So it's 0.6% in the resource. So really, really low starting point for it, which is iron's a deleterious element.
Thanks, Tim. The next one is from Rob Matthews. He says, exactly how far away are you from the Mount Marion deposit? And does Pioneer Dome have a similar ore body or geology to the Mount Marion project?
We're about 70 kilometres as the crow flies from Mount Marion. Mount Marion's to due north. They're quite different. Mount Marion obviously is a bigger deposit, a bigger resource, but quite different in geometry. So it's flat lying in places. It's completely different shape. And also has, from what I understand, different mineralogy across the zones, the spodumene zones. Ours are more discrete, more homogeneous, I think, in terms of mineralogy, and so quite different in terms of how we approach mining them. processing them.
Thanks, Tim. The next question from Jason Zeng is about whether you have any plans to do a placement or a capital raise. So perhaps you could give us a quick update on the company's cash position and.
Yeah, look, we should end the year with more or less the same money that we closed June with because of the options coming through. So we're well funded for the foreseeable future. There could be a catalyst that comes, during next year when we've achieved the outcomes of a really positive scoping study, landing the project partner. Let's see how that all plays out and the timing of it, and then we can reassess the right time for us to raise further capital.
A follow-up question from Rob Matthews. Approximately how many groups are you talking to in regards to offtake, and how many of these groups will you shortlist before making a final decision?
Well, look, there are many. Tactically, I don't want to disclose that, given that we're just about to go through the process, but there are certainly a lot of interested parties. We'll give out the expressions of interest, or we're dealing with a selected number of those, and then we'll shortlist, in early next year, and shortlist. Who knows? Let's see what comes forward, and the opportunities that they present.
Thanks, Tim. A question here from Andrew Galea. When is exploration drilling on the next campaign likely to occur? So I guess when's your next broader regional drilling program expected to kick off? Yeah,
look, as part of the drilling programs we've conducted this year, which have been focused on the deposits in the resource, it's allowed our exploration team also to step back and go back to almost a macro view of the whole project. And part of that has been, for example, looking at the structural and getting in a structural interpretation. So that's now been completed. Practically, I don't think we'll be drilling this year. So that'll be a March quarter event, and that'll be chasing, new exploration targets.
Thanks, Tim. And a follow-up here from David Broomfield. Has variability in the lithium mineralisation type been observed?
No, well, that's where we're lucky. In Cade and Davey are slightly different, but within themselves, they're relatively homogeneous. So, a hole in the south of Cade and a hole in the north of Cade in terms of diamond core, if you look at the two core, put them side by side, they look pretty similar. So we're pretty fortunate that the mineralogy is relatively homogeneous within the two. The crystal size in Davey appears to be slightly larger than Cade, and Davey has some trace lepidolite, but again, it looks relatively consistent within it. And the met test work we've done shows that we can get good recoveries out of our in terms of recovering spodumene into a concentrate at a good grade. So it looks pretty promising.
Thanks, Tim. I think we've covered most questions. So look, we might just sort of wrap things up. Perhaps if you could just give us a look through. You've flagged lots of news flow between now and the end of the year, and then moving obviously into the first quarter of next year. Perhaps just give us a quick summary, Tim, of what lies ahead in the next few months for Essential.
Yeah, sure, Nicholas. So we'll have assays back from the latest round of drilling by the end of October. We've started the scoping study. Those assays will feed into a resource update that'll come out in November, probably the second half of November. That then feeds into pit studies that then feed back into the scoping study. So then that all wraps up, let's call it January. And also in parallel with that, we're engaging with potential project partners. And the intention is to try and get to some sort of term sheet, towards the end of the March quarter. So it's pretty exciting times. And just on the exploration front, I know that we don't speak a lot about it. We do a lot of work in the background. I'm not really keen on putting out, announcements that say we've found a rock chip with a bit of lithium in it. I think, we're beyond that. We'll be putting out good updates as we move forward, but really it'll be when we're onto another lithium pegmatite that you'll know about it.
Thanks, Tim. Speaking of rock chips with lithium in them. I might just squeeze one last question in here from Graham Finn. He says, have you undertaken any rock chip sampling or more advanced exploration on your tenement E15 1710, which is about 10 kilometres from the Mount Marion project?
Yeah, look, we haven't talked a lot about that, again, for the reasons that I've just explained. We want to see what we've got first. We certainly have. We're working on that in the background.
Watch this space.
Correct.
Thanks very much, Tim. We appreciate your time this morning, and thanks very much to everyone who's tuned in and for your questions. We appreciate your time. A recording of this will be emailed out to everyone, and it will be uploaded to YouTube in the very near future, the next couple of hours. So please access that recording. Also, just to quickly mention that Tim and Essential will be joining our Resources Rising Stars Summer Series one-day investor events at the end of November. We'll be in Sydney on Tuesday, the 29th of November, and Melbourne on the 1st of December. So please go to our website for details of those great events. Essential will be one of 22 fantastic resource stories presenting on those days, and we look forward to catching up with all of our investors and friends on the East Coast during that period. Thanks again for your time this morning, and thank you to Tim and the Essential Metals team for joining us. Good morning.
Thank you.